Market news now. The dollar is steady as investors take stock of U.S. economic data ahead of the Federal Reserve's policy meeting this week on Wednesday, while escalating geopolitical tensions in the Middle East keep a lid on risk sentiment. Gold prices rose on escalating tensions in the Middle East area, although the moves were limited. Locally, fashion retailer Truworths warned that its half-year profit growth is likely to more than half. The company said financially constrained shoppers have held back from buying clothes and that local port congestion woes disrupted deliveries. To give us more perspective, we are joined by Patrice Rousseau, the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. So we have this environment where the Chinese side is trying to put in new measures to stimulate the market, and yet at the same time we are still looking ahead to the Fed meeting on Wednesday. What's the market sentiment as you factor in all of those dynamics?
Good afternoon, Anastasia, and to all the SABC viewers. Yes, the JSE's fortunes tend to be more linked to what is going on in China, especially our resources sector, which has been under pressure year to date, as you mentioned, with the Chinese economy really experiencing a slowdown. Our resources sector was down 8% year to date, and we see that through selected commodity prices, especially palladium and platinum, which were both down year to date, double digits. So that's really the part which is linked, I would say, to the Chinese economy. On the other hand, as you rightly mentioned, all eyes on the FOMC, the Federal Reserve. And there the question is, when will they start to signal to the market that they are prepared to cut interest rates? I think they will hold interest rates now, but I think it's all in terms of in the outlook and what the Fed Chair, Jerome Powell, is going to say about his views on inflation and whether he expects rates to come down fairly soon.
Let's talk company specific right now and focus in locally. We had Truworths release a trading update. Last week we had the Foschini Group. Is there something that we can take away from these trading updates so far when we look at the performance of the clothing retailers?
Yeah, it's a very good question. I think really Truworths very much contrasting with the Foschini Group. So what we look at is the sales, the comparable sales in South Africa, for instance, which is the base of these companies. Truworths sales in South Africa are down over 3%. We saw Foschini sales up 1%. We saw Mr. Price doing very well with sales 4%. So in some cases better than others. I think Truworths really seeming to suffer more than others, probably showing that the consumer spending less on fashion item and more on basics, and also the fact that it's really a business which relies on credit. And I think the credit worthiness of consumers also under question. So South Africa still under pressure, still having, as you mentioned, ports issues and being able to bring inventory into the country. And I think the disposable income still remains under pressure.
We've got about 3 trading days or so left for the month of January. What would you say are some of the factors that drove performance for this month so far?
Yeah, so on the JSE, definitely negatively impacted by the negative Chinese sentiment, which has filtered through in metal prices and in the resources sector. And then globally, still this year, very strong performance from the NASDAQ, up 4% in dollars. And within that, the biggest 7 shares, the Magnificent 7, up almost 7% this year alone, after performing, really, it was an amazing performance last year, up almost 180%. So this tells of 2 markets, and unfortunately, like most emerging markets, we lagging behind the developed markets, South Africa and the rest of emerging markets.
On that note then, is there a part of the rally, whether you're looking at the US side of things or wherever the case may be, where you feel like the rally has gotten ahead of itself?
Yeah, I think we will get this week 4 of the 7 Magnificent 7 stocks are going to be reporting this week. Everyone is expected to report strong revenue, strong numbers, especially Microsoft, Alphabet, the parent of Google, and Amazon. Apple, not so much, but I think the issue here, when you have share prices moving up that strongly ahead of results, there's always a risk of disappointment, especially in the guidance. So what analysts look at is not just the published numbers, but what outlook the management are guiding towards. What do they see for the next quarter or next 6 months after the current reporting period?
As we wrap up, what do you think is next for equity markets?
I think what we have to watch right now is the path of inflation and basically whether the US will go into a soft landing. That's why payroll numbers this week are quite important, because payroll gives you an indication of the health of the labor market in the US, and that has a knock-on effect in terms of global markets.
Patrice, thank you so much for your time. That is Patrice Rassou, who's the Chief Investment Officer at Ashburton Investments. And as he mentioned, we've got 5 of the Magnificent 7 tech stocks that are reporting earnings this week, the likes of Apple, Microsoft, as well as Alphabet. And these are stocks that had eye-popping gains last year, but also drove the S&P 500 to record levels in January.